Hi, and welcome to More Than Mortgages. I'm Chad Anderson. Today, we're going to talk about foreclosures. Everybody loves to pump that fear. That's what gets everybody going on the internets, right? And all the webs and everything. People love to talk about the 2008 crash. Why do people enjoy so much sitting here and talking about something so negative? It's like you don't get a prize for predicting a crash, but everybody loves to be the one to point it out. Zach and I have some data that actually contradicts that. And we're going to talk about it for the next 10 or 15 minutes and see what we can actually dig into and explain some common sense as to why we think that this actually will not take place, at least not anytime in the near or immediate future. So, all right, welcome in, Zach. How are you doing today, buddy?
Hey, good morning, man. I'm doing good. Good.
Good.
How about you?
Doing good. Just waiting on Dorothy to fly by the window as we record this episode. Hopefully everyone safe and able to live through the storms that coming through the Nashville area today, or I guess yesterday, based on when this is being recorded. But speaking of storms, there are a lot of people who can't wait to push financial storms, and they just pump it and pump it and pump it. There are literally people, I'm almost convinced, I really want to hook them up to a polygraph and say, do you honestly believe everything you're pumping? Or is this simply a social media play for clicks and views and brand and recognition? And hey, look at me. Because if you're wrong, then you get to be like, thank God I was wrong. Now look how great it is. And everybody's happy.
Right.
If
Right.
you're right and it does crash, which it won't, but if you are right and it does crash, you can beat your chest and say, told you so, while everyone wallows and lives in a life of suffering like they did 15 and 16 years ago. I don't get it. Do you think is it all just clicks? Do people really think when they look at some of the math that things are going to crash?
Well, that's I guess foreclosures are at least one of the episodes of the reality TV of real estate, right?
Mhm.
It's drama and it's setups and it's how can we get the clicks? I really believe that. I did a video maybe last year sometime on the Crash Bros, where you can kind
You
of
did.
look at real estate crash on YouTube, and you'll come up with the same guys predicting the same things over and over again. And it harkens back to, you think about a person like Diana Olick, who is kind of famous in real estate circles,
Yep.
who is the editor and commentator for both real estate and, ironically enough, climate change. She is the head person at MSNBC to comment on both the climate change controversy and real estate, and it's always negative. She's been predicting the crash. What is it? I guess it's
8 years?
9 years now, maybe 10 years, for a
Yeah,
full
I was gonna say
decade.
8, but maybe it's been 9 or 10. Yeah,
Yeah,
she's been on that horse for a while.
and
She'd be a hell of
I
a
mean,
bull rider.
she's made a career out of it. And
Yeah.
so, absolutely, if there's a crash bro out there on YouTube who's making $7,000 a month for putting out real estate crash videos, they're going to keep on doing it. And like you said, there really isn't any consequences for making bad predictions these days.
No, there's not. That's like the beauty and the negative of and the danger of social media, right? Is everybody
Right.
has a platform. And I'm not talking about you should silence people or invade their freedom of speech, but it's the old saying is right, a broken clock is right twice a day. And
Right.
so when you just constantly pump it and pump it and pump it, and then 10 years from now, you're right. It's like, see, I told you so. And really, you're not even close to being accurate because you're just throwing it out there. It's like, what do they say? Sling it against the wall, see what sticks. And that's what's happening with some of these people.
Well, in my mind, there's that human nature element that if it bleeds, it leads. We like the drama. We want to hear stuff. And the news media is always just negative focus. There's not
It
any
is.
any good news media out there,
No.
or it's very rare. The other thing I think is kind of a hidden little point of influence, or kind of a piece of spice in this deal, is that if somebody can get out there and go viral on something like foreclosure, then there's this little trailer that comes in there that might be a hidden benefit to that, Chad. And that's, oh gosh, if the market gets flooded with foreclosures, then all these people who feel like they can't buy a house are going to get a deal. So it's not all bad news. I think the foreclosure and housing crash drama is particularly appealing for that reason, that there's a group of people that feel like they might benefit if that really happened. Now, what people don't understand is if there's a nationwide housing crash, then you're going to be looking for a job. You're not going to be looking for a house, because there's going to be other things that are magnificently bad in that economy for a housing crash to actually happen. But people aren't thinking that far.
No, if it's such a great point. The United States economy is so heavily vested, and things revolve around the housing market. And it's massive for the
Huge.
US economy. Okay. So if you take the whole economy and pull out housing and say foreclosures, all these other things, uh, they have collateral effects. There's so much collateral damage, like Zach was just saying. The amount of people who end up out of work and out of jobs, and going into bankruptcy, and then foreclosure, and then you got the rental markets that start buoying up and down, and there's so many different things and impacts based on just housing, that it's a very fragile topic. And I think a lot of people start to just toss it around freely, like, oh, it's going to crash. And a lot of times, I'm going to pull up some data that I actually shared on a video yesterday, or on Monday rather. But that people, it's trickery by numbers, it's sales by numbers. This is something that I always laugh a little bit about: coaches or sales teams or real estate companies or sports teams or mortgage companies, whatever. When they want to promote themselves, they go and extract this little bit of data that fits their narrative.
Right.
And it may have actually nothing to do with the grand scheme of the whole sector, but they pull this out to either make themselves look good or make their opponents look bad. I don't know. Have you ever seen that movie Little Big League?
Yes, I have.
And in there, and I'm such a baseball guy and I'm a Cubs fan, so I can relate to this because Cubs Twitter does this all the time. All the time, okay? Because
Yeah.
the Cubs, other than their run 8 years ago and won the World Series, God bless them. But after that, they've kind of fallen back into a little bit of this mediocrity. And before, they
Right.
were the lovable losers. And what happens with Cubs Twitter, and this is a scene in Little Big League too, where the announcer, they say, I'm ad-libbing here, but they'll say, like, here comes John Doe to the plate. He's batting .683 in the month of September when he's facing a lefty who just has one child, and they're playing on the road inside of a dome on a Monday through Thursday.
Right.
And it's like you pull all this out. You
Right.
keep filtering like you're in Microsoft Excel. You just keep clicking filters. And it's like, I'm the greatest hitter ever when it
Right.
comes to this specific scenario. And the point is, you can overfilter things. I mean, you can do whatever you want to numbers. Numbers, I just look at the jobs reports. They can be manipulated to whatever you want, anytime you want. And then, oh yeah, other people start going, well, what about this? Well, what about over here? Well, what if you add this back in? It's like, well, you're not as great all of a sudden
We need
as
to revise those numbers. We're going to do a revision.
we are.
Yeah.
We are.
Yeah.
You know what? We're going to clean this up a little bit. We just had an intern running those, ran them through the machine the night before. We're gonna clean this back up some.
It's like politicians getting caught and then saying, I misspoke.
Yeah.
What does misspeaking mean? That means lying. I misspoke.
It's a very professional term for lying, is what it
Right.
is.
Right.
All right, so let's share this real quick. This graph, I got this from Chuck Cowan on Facebook. Chuck does a great job of sharing a lot of interesting data.
Right.
I'd love to know where he gets it all, because he's got it nonstop. He's a terrific follow, by the way. if you're in mortgage or real estate or just interested in the housing economy. So over here, these bars, vertical bars, tell you the amount of mortgage debt in the United States. And this is your loan to value percentage, 60, 50, 40, and so forth. And then over here, so this is present day, you can see we're barely under 30%. So currently, $45 trillion of primary residence housing is owned in the United States.
How
Okay.
much?
Not investors, take investors out. Primary residences, $45 trillion.
45 trillion.
$45 trillion of housing assets, primary residence. Okay. Of that 45 trillion, about 13 trillion has mortgage. Okay. That's where you get the 29% loan to value, 13 trillion mortgaged, 45 trillion in equity. A lot of free and clear homes out
Right.
there, basically. Hit the elephant in the room on that one. All right. The amount of equity and the loan to value, by the way, has crept up just a hair. It was 27.5% last reading. So the amount of equity, though, it's down from last quarter, but it's up year over year. And that here is the equity. The equity, the 32 trillion that I mentioned. So this is 30,000, but it's shown in billions, which is 32 trillion right here. So 32 trillion. That means on average, if you averaged it all out, obviously not every person has this, but if you averaged it out across the country, homeowners have $324,000 of equity in their house. $324,000. So, Zach, I'm going to let you run with this one. If you're a homeowner, though, and you're sitting here with an asset, compare it to 2008 and 9,
Right.
and that asset, and in your words, explain to people how this doesn't add up from a foreclosure perspective, because we're in a completely different situation than when we were 15 years ago.
Right. And I want to just put a little bit of a layer on this, because there will be some people, the crash bros maybe, or the eternal pessimists, who would say, well, yeah, that's great, but those are, that's the upper crust of our society, and homeownership isn't accessible to the normal person. And right now, the percentage of homeowners out of potential homeowners in the United States is at the highest point ever. Americans own more houses as a percentage of the population than ever before. And that was kind of throw back to a few episodes ago, where I figured out that 26% of people who are between 19 and 25 actually own a home now. The highest percentage ever. I mean, that's a remarkable number for that age group. So going back into this idea that, we've got so much equity. If the average homeowner has $300,000 worth of equity in their home, then if you understand real estate at all, what you understand is that it comes down to supply and demand as a consumer item, housing as a consumer item, supply and demand. So if I have an asset that has value in it, whether it's a jet ski or a house, and I owe debt on that, and the debt is coming due, and I can't pay the debt on it as a payment, then the bank is going to come and repossess my jet ski, or they're going to foreclose on my house if I don't do something about it. If I'm upside down in that, meaning I owe more than it's actually worth, then I don't have an option to sell that and add money to it, because I can't make my payment. So there is a repossession that takes place. But wherever there is value over and above what I owe, then, and especially in a market where supply is short of demand, then all I really have to do on my house that I'm feeling like I'm running behind on, and they're starting to call me about making my payments and threaten foreclosure, I put a sign in the yard to sell it. So that demand is going to protect my my foreclosure position because I can sell the house, take money, and start over again. I can leave that position if I'm an average American, and I don't suffer the consequences. I've got enough equity, enough net proceeds from the sale of that house that it's a restart. It's not a total loss. And there's another thing at play here, Chad, that I'll throw in because I want your ideas about it. The wholesaling and the investor market is tighter than it ever has been, in my opinion. So the house flippers are having a hard time finding houses that they can flip and make money on because
Yeah.
that has been such a running profit center for years and years and years and years and years. That's why we see them going out to little small towns and flipping in rural areas and flipping manufactured homes in our market. They're redoing manufactured homes. It's crazy. I never thought I'd ever see that. So I think that the crash bros and the people who are way optimistic about, oh gosh, I'm looking for a crash because I want these prices to come down because I'm going to go in there and buy a house. They vastly underestimate the network of investors and people who are experts at buying discounted properties and whose only job primarily in all of their waking hours is scouring the market for distressed properties and for discount properties. And they've got, if I'm an investor and I've got a bunch of money that I want to buy houses with, I may have a dozen real estate agents that are looking for properties for me off market.
Right.
And so this naive 23-year-old who's going to go in there and steal a house at foreclosure, you have no idea about the forces that are working against you in that kind of idealistic fantasy of buying a discounted property.
Yeah, I want to go back. You hit on something that people don't realize a lot of times. I think too many people get confused. Like, let's say you have 6 payments due every month to creditors. Okay, let's say you have the mortgage payment, you've got a car loan, you got 2 car loans. Okay, and then you got a Visa, you got an Amex, and then you got to have your Target card, as Zach always says. Got to have a Target card. So you got those 6 payments, right? And then things get so tight because inflation doesn't come down. You're racking up too much debt. Maybe you get laid off. Things start to pinch a little bit. Maybe you go from full time to part time. You don't get laid off, but there's just a reduction in income. Maybe one spouse gets laid off, whatever the case may be. Okay. Or you just run out of fuel because you're using debt to chase debt, which is happening a lot in this country. And you just run out of fuel and that's it. And now you got to figure something out. If you get your back completely against the wall like that, the items I just listed, you're going to start skipping those payments in reverse order. Which one are you going to pay, the Target card or the mortgage? Now, the balances aren't equal, the payments aren't equal, but you have to make the mortgage payment.
Right.
You have to. If you want to stay, you have to. Why would you have to and why would you want to stay? Well, today versus 2008, you've got $324,000 in equity on average. Maybe it's 50, maybe it's 100, but to the person who's struggling that much, even 30 grand is a lot to them.
Huge, right?
Compared to 300 grand. Either way, it's still a lot of money. Let's not start picking and choosing what's a lot of money to certain families because it's all relative to everyone's individual situation. Also, don't rip on families just because maybe they have a different lifestyle and maybe that's their own fault, but we shouldn't be ripping on them. Maybe everything was great and they got blindsided and life happens. It happens to all of us. We all have made those mistakes. But my point is the mortgage payment gets paid first. That is number one. Okay. And when that happens, and because you're going to protect that asset, that's going to draw it out even further and further and further to avoid foreclosure. Now, let's say that a month comes and goes, and you're like, I literally don't have the money to pay my mortgage. Well, if you're 30 days late, the bank doesn't knock on your door on day 31 and say, give me the keys.
Right.
Okay. You have to miss 4 to 5. It's going to depend too. Okay. It's going to depend a little bit because at certain points, different notes and agreements are made between individuals and lenders. So it could vary slightly, but you literally have to go 4 to 5 months without making your mortgage payment before you even get the foreclosure process going.
Right.
It's 6 to 7 months before you're actually out of your house. So what people were doing 15 years ago, hey, I'm just going to stay, live rent free basically, and not make any payments. Y'all can foreclose. It's going to take you 6, 7 months. Back then it took even longer
Right.
because they were so backlogged. You just live rent free, hoard cash, and then you go somewhere else and just rent for a year. And you probably saved up enough money to pay for half the year up front. But it's not like it's an overnight thing. That's my point. And guess what? If you're in the middle of that 6-month window where you're not making payments or can't make payments, what do, Zach? Modifications. Or
Listen,
you
yeah.
make one payment and then you delay everything because you did make one. So you interrupted the negative payments by making one or two. So
When you're at 45 days, Chad, they're calling you and trying to make deals with you and to go into modification and forbearance and, let's give you a break. People don't understand the folks who who are promoting this foreclosure wave stuff. Don't take into consideration that the bank does not want to take possession of that property. It doesn't matter how much equity is in it. They don't look up 123 Maple Street that's 45 days late and say, man, we're going to gig them. We're going to take that house and we're going to make a bunch of money on it. It's not like Mr. Potter and It's a Wonderful Life. He's not sitting up there in his throne chair trying to take people's equity away. The banks want you to make your payment. That's all
they
they
don't
care
want to
about
sell
is
the asset.
collecting that payment and staying on time and reducing the risk in their portfolio.
Yeah.
A foreclosure is a giant problem. So they're going to try to work that out with you 15 different ways.
Yeah.
And so I think that the people who wind up foreclosing are oftentimes just in such dire straits they can't do anything. It's a catastrophic medical event or job loss or something, or they get stubborn and stupid and dig their heels in, and then the sheriff's knocking on the door 5, 6,
Well,
7, 8, 10, 12 months later. But it takes a long time.
and back to Zach's point. So about selling the home. So if you have basically 6, 7 months to sell the home, then if your home is worth 4, 5, 600,000 and you owe 2, 3, 400,000, let's say you owe 3, it's worth 5. That's a 60% loan to value, double the national average. Let's say you owe 3, it's worth 5. Say you owe 3, it's worth 4. If it's really worth 4, you truly believe in today's market when people are still buying homes, you couldn't sell it for 375, 25 below market? It'd go in a day. Now your neighbors would hate you,
Yep.
but oh well.
But you don't have to do
Draw.
anything to that house either because it's
No,
discounted. You're not doing any repairs. You're
no,
not painting anything up. You're not cleaning out the gutters. It's fire sale.
0.
Boom. It's gone.
Fire sale, you get your 25 or you get 75 grand less your closing costs and commissions, and you move on.
Yep.
And you've avoided everything. And so that would happen well within that 6 or 7 month window. Really quick, a life story. I filed Chapter 13 back in 2014 because I was sued from an investment property foreclosure that stemmed from 2010, which was the end of the tail end of the crash.
Right.
Renters destroyed a home. I didn't have the money. Said, hey, tried to work it out with the bank. Bank didn't want to work it out. So I ended up getting sued by one bank, okay, more of a regional bank. Get sued by them. I don't have the money to pay the deficiency. I file a Chapter 13, which is a reorganization of debt. People get pennies on the dollar because I was making too much to do a Chapter 7. So I have to do a 13. Pennies on the dollar. I paid back like 14% of my debt or something over 5 years. Then in that Chapter 13, okay, the bank on another house I owned, they were hounding me, threats, calling me every name in the book. The call center people, you got to pay, you got to do this, you got to do this, you got to do this. And I finally told them, I'm out. I'm done. I'm good. And they just kept calling, kept calling. It wasn't until my attorney in Nashville sent out all the letters, with acknowledgement to, hey, my client has consumer debt with you. It's or housing debt or auto debt, whatever. He's filing a Chapter 13. This is your notice. The next day, they change their tune and they call
Now they
the
want to make a
attorney.
deal.
Does he want to work something out?
Yep.
Yeah, I had 2 middle fingers to give him, not
Yeah.
just one. But 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 it's just amazing, right? Like, they truly want to work it out. They don't want the house, like Zach said. It's the last thing on their mind. And
Yep.
like Zach said, maybe they have a lot of equity in the home. And you go, well, why wouldn't they want to sell the house? Even if they don't make 300 on it, they'll make, 150 or 200. What bank wouldn't want that? It goes deeper. Okay. Yes, that might help their balance sheet. They get rid of one debt and they add profit to the other column and so forth. But they get audited. And then they gets, well, why'd you make the loan in the first place? That's what the feds start asking. Why did you even make the loan? Did this person really qualify? Where did you miss? So in the mortgage world, Zach and I, we originate loans, and then we have underwriters, and then Fannie or Freddie or Ginnie Mae will come in and audit files and start asking questions here or there. When banks start making loans, it's the feds. Like, the FDIC starts coming in and they
Right.
start saying, hey, why'd you do this over here? So a lot of times that's why banks have the stigma of maybe uptight or over conservative or things like that, because that's what happens. Like, even though they came out ahead in that scenario, they're still going to get dinged for making a bad loan.
Right.
So I don't
And
know.
and dings for
Final thought.
making bad loans or violating some legislative act or something means big fines to banks. And banks aren't in the
Right.
business of paying fines; they're in the business of collecting interest.
Yeah.
So
Well, that's the key. People got to remember, banks, they don't really care about mortgages. It's a side dish.
yeah,
That their focus is community and relationships and checking and savings and retirement accounts and market accounts and securities and all those things. Mortgage is a tiny, tiny sliver of their whole pie. So that's another reason looking at that. Anything else, Zach, before we wrap
and
up?
that's a good coverage. I think if you go back to the graph that you showed, Chad, it's just not an environment where, with that yellow line so high,
Yeah,
we're just not going to see a wave of foreclosures. We'll see a little dribble drabble of them,
right.
but those may never even hit the retail market where some young family is going to be able to try to buy a house from the bank. I haven't looked at the. It used to be interesting to kind of go take a peek at the HUD foreclosure website,
Yeah,
and I'd have people call and say, "Hey, I want to buy a HUD foreclosure." I'm like, "So have you looked at the list? Because there's 7 in the state
yeah.
of
And the
Tennessee."
whole state. Yeah,
Yeah, and in the whole state, and there's one house in Hohenwald that doesn't have boards on the windows, and the
yeah,
rest of them are in West Memphis.
yeah.
So it's
Uh,
just not a viable thing in this market with those kinds of amount of equity in properties. It's just very rare that you're going to see a real true foreclosure or even a pre-foreclosure come up for sale.
yeah. It's rare. I don't see it happening anytime soon. That one's way off. And I hope this helps explain. Like, Zach and I aren't just here pumping that news. We're actually using the data and a simple supply, demand, and amount of equity in a home. Don't see it happening. Remember, 2008, we'll leave on this stat. There were at one point, I think, over 3.5 million homes for sale. 3.5 million. Currently, there's about 1.1 to 1.2 million for sale.
Yeah.
Take out all the ones that are under contract or under construction, meaning they're on the market for sale, but you couldn't move in today, or that are under contract and just haven't closed yet. That number dwindles down to about 600,000.
Which
So,
is crazy, right?
yeah, so there's still an inventory issue. Inventory is rising, but when you try to compare again the numbers to 2008, we are at about 15 to 16% of the inventory that existed at that time. So,
Well, and remember too, Chad, all that sleeper inventory that was sitting in the market in 2010 that was ready to foreclose on, and it was vacant. A lot of it was vacant, but the banks just couldn't get the paperwork done. I can remember, I don't even remember how many calls I took about people saying, hey, listen, how do I get this house is empty down the street? I've been watching it. It's been empty for a year and a half. The neighbors are mowing the grass. How do I get information on who owns that house so I can buy it? It's
Right.
like, you're just going to have to wait till the sign goes in the yard, because there really isn't any way to tell who actually possesses that house right now. So there's this massive amount of sleeper inventory that was sitting out there doing nothing. It was just rotting, empty, or maybe it was occupied, but it really should have been on the market active for sale, and they just couldn't get the paperwork process.
There was I'm going to share this here in just a second. There was another quick story. We keep saying this, but it's so funny when you talk about this topic. There's this little old lady when I was in a call center 12 years ago who called me up, and she wanted to cash out refinance on her house to pay off debt. I swear to you, this was in North Carolina. She called me up, and I said, okay, no problem. And part of the conversation is, hey, I don't see your mortgage on your credit report. And she said, oh no, I have it, or I'm on the loan, and I, had a copy. She had a copy of the note, truly. But it wasn't on her credit report for whatever reason. So in our world, we have to verify that you've made mortgage payments to qualify you. So we have to get what's called a VOM, a verification of mortgage, to make sure, hey, you've made your house payment on time. I said, okay, well, great. But I just need to know either through bank statements, or we'll have to call the mortgage company and verify you've made payments on your mortgage in order to get you the cash out. She said, oh, I haven't made my payments. I'm like, okay, well, when's the last time you made a payment? Zach, she said 2 years ago.
The last time they sent me a statement.
I said, ma'am, so let me get this straight. You owe a debt. Okay. You haven't made a payment in 2 years, but you want to refinance. She said, well, yeah, I wanted to get some cash out and get those low interest rates. I said, ma'am, your interest rate currently is 0. Like, why would you want to do anything? Well, I need some cash or whatever. You need to just hoard your cash and pay your bills and try to just somehow keep your credit in line. I said, if we call and do a verification on you, it's going to sound off every alarm in that building.
Yeah.
There's no reason. And I said, you need to hang up and don't ever call me or any banker again. And she did. She hung up. And I never heard back from her. But
that's crazy, isn't it?
That's how crazy it was. Yeah. In 2011, 2012. So to finish this off, just because I love the movie, here is oh, you know what? I think I have to do it here. Let me make sure I do this correctly. So the Little Big League, we will end on this because this is so great. And let's play it. You'll get a kick out of this one, Zach. I'm sure you've seen it.
Here's Jerry Johnson celebrating his 11th season with the Twins. He's had a rough go of it so far. Not many at-bats. His batting average, 194. That's nearly 80 points below his career average. Strike one. Oh, boy, he sure looked bad swinging at that pitch. Last year, though, he was 6th in the American League at hitting right-handers he was facing for the first time after the 7th inning at home. So that's something.
So
he's the best left-handed Presbyterian batter on this team since 1987.
It's such a great 30-second clip. And because I used to be in broadcasting with sports, that one always gets me every time. So pardon my humor on that. That one is more for me. But yeah, it's a great one. All right. If you can help us out, like, subscribe, follow, hit the bell, comment, DM, share, whatever you can do. We got the socials here, YouTube, Instagram, and Facebook. He's at Zach Jones Loans. I'm at This Chat Is Real. Thanks for hanging out with us. That's 20 episodes in the books. We'll rejoin you next week here on the channel. Hope everybody has a great one.
Thanks for